So we're now into June of a very rapidly shifting market, and I just kind of wanted to go over all the stats in a little bit more of granular detail so that we can get an idea of what exactly is happening and what we can expect to see moving forward into the summer. First of all, before we get started, I just wanted to say thank you so much for coming back to watch my channel. I really appreciate you guys as an audience, and I've had a lot of you reaching out to me, sending me some love, so thank you so much. And if you don't mind hitting the subscribe button if you enjoy the content, I really enjoy making it for you. And if you like this video, hit that thumbs up to help promote the channel. And just one more bit of housekeeping first. If you haven't already taken me up on my offer, if you see a house that you are interested in and you want to know what it could be worth, feel free to scroll down into the description. There is a link that will connect you to my calendar where you can choose a time that is best for you for us to chat, or feel free to just email me a property address to adam@visionrealestate.ca and I will send you back a video with my personal opinion of value within 24 hours. So let's get right into it. Everybody knows that the market is shifting and prices are likely moving down, but why is it happening and what can we expect to move forward? Starting with price. We all know prices are down, but they're down from the peak of the market. And if we really roll time back and look at exactly how we got to those crazy prices, it all happened in a very short time. So when we're seeing prices go down over a very short time as well, we're just seeing a rebound from crazy back to normal. Now, what do I mean by this? I mean that in the last 6 months leading up to the peak, which was about February or March, we saw price increasing almost vertically on the graph for the 6 months prior to that. Since the very peak in February, we have seen an almost 10% decrease in average price. Now, year over year, we are still up by about 9%, but month over month, we are decreasing steadily and we are at about a 3% decrease month over month in average price. And I always go over price first because that's what people really want to know, but that's not really what I find very interesting. What I really find interesting is the consumption rate. Now, many of you have heard me speak about this before, and we call it months of inventory in the industry, but what we're basically talking about is consumption rate, how fast things are coming onto the market and how quickly they're selling. So let's look at the graph from the Toronto Real Estate Board on sales to new listings as a ratio. Right now, we are way down in that ratio. In fact, we're much lower than we've been even in the past 3 years prior to COVID. Now, when we look at the listings to sales ratio, there are obviously two factors. There's new listings and then there's sales. If we look at that ratio and it's way down, it could be affected by either one of those numbers. So which number is affecting it, and is it possibly both? Let's start with new listings. Are we seeing as many new listings coming onto the market this year as we were last year? And it turns out that we're actually right on track for last year and also prior to COVID in 2019. This is actually a really normal seasonal trend in terms of new listings hitting the market. We should see about what we're seeing right now. It's probably a little lower than it would be normally, but it's still within a pretty normal range for Toronto. So that obviously leaves us with sales. And of course, that is what's way down. Year over year, we're just about 40% down in sales volume compared to May of last year. And month over month, we're even down almost 10%. What this tells me is that our market is freezing up. No one's doing anything, and it's because there is a ton of uncertainty right now given the interest rate hikes. And obviously that means that houses are sitting longer and longer on the market. Year over year, days on market as an average are up 20%. And month over month, days on market are up almost 10%. So what does this mean for you? And what can we expect moving forward? Well, it means that we are going to see interest rates cooling our market further and further. And if you're a buyer right now, you shouldn't necessarily be hip hip hooray for yourself quite yet. Prices don't go down in a vacuum. They go down in relation to actual affordability on a monthly basis when it comes to interest rates and borrowing. What this means is you should basically be calling your mortgage broker, and you should be calling them right away and be speaking to them quite frequently. If you're looking to buy something, you should be locking in a rate if you haven't already. Rates are going up and you can get a rate hold for free. It does not cost you anything, and you could probably hold on to that rate for 3 or 4 months. But overall, if you're a buyer, you should just be picky. Only buy something if it checks all the boxes for you. You should and will be entitled to do that in this type of market. And if you do find something that does click, be aggressive with your negotiation. Make sure you get your conditions. Make sure you look over a property with an inspector. Make sure you get a financing condition to make sure that the bank is okay with what you're purchasing as well. Don't take any chances. This is a tumultuous market. And if you're a seller, well, you should be a little bit more careful. Don't look at what the Johnsons got down the street a couple of months ago and compare that to your property now. Things are very different. And what that means for you is you should really be focusing on consumption rate. The months of inventory in your neighborhood will tell you how long it's going to take you to sell and how aggressively you need to be pricing your home in order to sell. If you're a seller, now is not the time to be beating your chest and overpricing your home. You will stigmatize your property if you sit for too long on the market. But overall, I just want to send the main message to everybody to not freak out. This is a normal market correction that, frankly, we should have seen a little while ago. This is a healthy thing for both buyers and sellers, and I think that we should be looking to just take things a little bit easy. The world's not crashing down around us. The headlines are definitely overhyping everything in any direction that will sell papers. And at the end of the day, real estate in Toronto is always going to be a great investment. And that's not my opinion. That is just economic fact because we keep on pumping more dollars into the economy. The way that asset growth works is in a juxtaposition to inflation. That is simple economic facts. The more dollars that we have chasing fewer goods, the more the correlative value of the asset increases. Real estate is scarce, and it always will be. We have a short supply now, even if they are taking longer to sell, and we still need to consider that when we're buying things as an investment. If you've already bought, you're still holding a really great asset in a very densely populated area of the world, and you're gonna be just fine. Anyways, I really hope you enjoy this content and you find it useful and helpful. If you have any questions at all, feel free to comment below and let me know. If you would like me to, again, give you that valuation on any property that you're interested in. If you see it online and wanna know more about it, you know how to get at me. Have an amazing day, and I'll see you next time.